If you've seen the first video, you've seen that this series is going to be about attempting to trade the turtle trading strategy on a small account. Now you can see that I already have 3 positions on, sugar, bonds, and copper, and these were literally chosen as per how the strategy says. Now, just to further elaborate here, I've already got 3 positions on, or 3 units on for copper, 4 for bonds, and I think it's 2 for sugar. I actually had one for natural gas, but I actually I already bailed from the strategy because let me pull up the natural gas chart. This is the natural gas. I think I got in somewhere on this breakout here. Let's say around here. It went up, or I think it might have been actually this breakout. It was earlier, so somewhere here. I think I got 2 positions in natural gas. It spiked up and it came back down, and then it was just sitting there. And so, because of its performance relative to the other positions being held, I actually exited. And so I can say right away that I abandoned the strategy. What I should have done is continue to hold it. I think the stop was somewhere down here. And so that's kind of what happened with the 4th market I was following. Now these markets are the ones I've found. I just basically went through and started clicking the charts and looking at where everything was. And so copper, sorry if I'm jumping around, so copper, the trades were at 375, 377, 381. So 375 is where I started putting on the first position. So I don't know if this is 100% correct because I feel that I got in fairly late. I mean, as I said, I started looking at these things on February 1st. So I think what I did when I looked on February 1st is I saw that there was this breakout over the blue line. So I then just looked to get in. I think it was somewhere here, 375. I just jumped in. There's no mincing that up. I didn't wait, and so right away we could say that I am not following the strategy. So whether I should scrap these particular trades from the study, though I don't really think this is a study per se, it's just my attempt at trading this. But in any case, for transparency, that's what happened. I started looking at the market, as I said, February 1st, so it must have been here. And then I tried to figure out, well, how do I compensate for what's already happened? Because, just to backtrack a bit, I was looking for breakouts. And so the lines that you see here, the blue lines, the blue channel, these are the Donchian channels, I don't know how you pronounce it. This is a 55-day channel. I think we could see it up here. I've got a 55, the gold one is the 20-day, and the green one is the 10-day. So I basically set those on because the turtle strategy either goes with a 55-day breakout or a 20-day breakout. The 55-day breakout has a 20-day trailing stop, and the 20-day breakout has a 10-day trailing stop. So I didn't know which one I was actually going to follow. But as I started, I just found it easier to look at the 50-day breakout. And so my logic was, well, it originally broke out here. Well, actually probably broke out earlier, but let's just look at this. It kind of broke out here, and then it hit the yellow, which would have stopped it out. And so at this point, when it breaks out again, then this seems like a valid entry, to which actually this looks like where the proper entry should have been, and it looks like it probably would have continued up without hitting the 20-day trailing stop at all. So this would have been a much more successful trade. As it stands right now, I'm very surprised. I mean, even at the breakout levels that I got, the markets continued to go up. And this is an interesting contrast because the one thing I've found somewhat freeing with the turtle method so far is the fact that I'm not trying to be right. I'm simply trying to get in and participate with trends as they occur. And so I am still learning that, because I think it's easy to want to try to guess what's going to go, but remarkably, every day when I go to check the positions, for some, they just kind of keep going, um, without me even really knowing why. I mean, when I took the copper trade, I know nothing about copper. All I did was look at the chart, and again, this may come back to get me. It may come back to bite me, but as far as I can tell, that's really what they do. Now, I did make sure that I am risking and calculating the position sizing as per how it's done. So for each trade, I'm looking to risk 1% of my account on that trade. So I think a trade, or at least what I'm calling a trade, I think they call a unit. So if we look at the copper, this is kind of a little bit, also a bit wacky. I think I had some miscalculations early on. I think it was a stop level was different, and so that's why you see the unit sizes are actually not the same. When I went to put the second unit on, I thought that I'd calculated it properly, and then I went to put the third, and it's also slightly different. So again, that's part of the fact that I'm still learning how to do this. And when I put the bond trades on, I think the calculations were a little more straightforward, and they all are the same number of units. And I think the sugar is also correct. So I'm not sure what I did with the copper trade, but as I said, that was the very first ones I started putting on, and I wasn't 100% sure why the calculations were off. So let's take a look at the bond trade, and again, I have no idea why it's doing what it's doing. If we look at the pricing again, where did I get it? So the first one's at 167.08, all the way down to 164. So 167.08 is about at this level. And so it would be one of these bars. It was probably this green bar here. Let's even say it was this one. So the market was going up. It had made the breakout already. I think just like the copper trade, if you look back, you see the trade was already in motion. So I don't know how this is supposed to be handled. If you are a professional trader and you're regularly following the market, then of course you're going to catch the breakouts earlier. Like I'm earlier in terms of, well, you would be active here. I didn't start looking till here, so I don't know if I'm supposed to wait until the market goes the other way or what. So I literally just said, well, this trade seems to be in process, so I got in as it kind of went back up here. And then I scaled in on approximately half ATRs as it went down. I say approximate because if we look at the numbers, you'll see that it's not exactly. And again, it's because I was not following the trades throughout the day, and I didn't leave stop orders in. So I'm going to probably start using some stop orders in the future to see if that helps. I've got stop orders now for the trailing stops. You can probably see that here. So all of the open trades have stop orders attached to them. And finally is sugar, same thing. I'm not sure if... So again, sugar was starting a breakout earlier on, late last year, I guess. I consider here it probably would have stopped out. If that's the case, then this would have been a new entry. But again, that's not the one I would have participated in. I entered up around here. So, as per the strategy, I'm pretty much assuming that these can turn around at any time and stop me out. The stops are all currently at their 2 ATR limits. Let's just show the orders. So here's the stops right now. I mean, as the yellow or the gold channel starts to tick past this, I will trail the stop. But as it stands right now, for these markets, the trailing stops are in. I'm not sure how it works in terms of correlations because they're technically three different markets. We have copper, bonds, and sugar. But I don't know how it works because they are all breaking out at the same time. So I don't know if there's actually any correlation there. I'm still, as I said, I'm still learning about this and still trying to find out. I mean, I read the original turtle strategy, and aside from picking different markets, I don't think there was anything on how to actually measure the correlations. So I don't know if I'm actually trading something essentially similar because they're all breaking out at the same time, or if these markets are going to behave differently as we move forward. So that's roughly how I got into these trades. And if you want any more details on how I calculated the actual positions, leave a comment and I can do a video on that. Or if there's anything else that you want to know or would like to suggest, or comment on whether you know anything about how to ascertain the correlations, then please go ahead and do so. Thanks.